Hey everyone, welcome back to Chasing Returns. This is episode 5. I'm JJ,
I'm Zach.
and we're gonna jump right back into it today. Zach, you went on a little trip that we teased last week. You want to talk about that?
Yep, I was in Omaha last weekend. Been wanting to go for years, but COVID didn't make it possible till this year. And then ironically, I got COVID when I was there. Um, so still recovering from that. But yeah, I had a great time. It's a really good. So basically, I flew in, and then Friday night they have this huge, or Friday afternoon they have this huge um, set up in the conference center there where all their subsidiaries come in and set up booths. So like BNSF had like a model train, and Geico was selling policies and merchandise. NetJets had a model private jet that you could walk through. This one's kind of cool. Clayton Homes, which is their manufactured home um, company, they had they had like a model home there. This thing is like, what was it, 3 bedroom, 2 or 3 bath, pretty big, pretty nice, and it's 220,000, which is kind of appealing when site built homes are just going through the roof right now.
What causes that home to be that price?
Well, it's one of the it's like delivered to you. Like it's a
One
you
of
basically
those.
just buy the land and it's delivered to you, and then they drop it off.
Gotcha. So is it like one of those like two pieces homes where it's shipped in on two trucks?
It might be. I'm not sure how, but like when you're inside of it, it's pretty nice.
Well, it was interesting because one thing I've been seeing recently that's been popping up on my YouTube page and I've seen also on the internet is the idea of 3D printed homes. Have you been seeing that at all?
No, I don't even know what that
So
means.
basically, and it's not completely like when people think that you're like, oh, they build the entire house. No, it's just like the foundation. So they're able to do like all the walls and all that. Like obviously the house still needs to be insulated, needs to have plumbing, needs to have electrical, like that still needs to be done.
Hmm.
But supposedly the 3D printing of obviously like getting kind of the base of the house done with all of kind of the walls and whatnot. It saves a couple months of work and it's like, obviously it's cheaper because of the labor. So it's something that's been popping up. I saw it was in Texas. Some neighborhood is starting to do it to test it. Obviously, the big question I have is the durability, but it just was
Yeah.
interesting because obviously housing prices have been going up so much, and that's an idea maybe in the future of that can bring stuff down. So I was something that just popped to my mind when you brought that up.
Yeah, it's interesting. Um, so yeah, there was that. Seas Candy's the big exhibit there that like super popular. Um, and then uh, uh, another point is this is just a great networking event. Like basically anyone there, if they're there, there's someone who I think is worth talking to. So you can just ask, where are you from? What got you into Berkshire? Um, so yeah. And then the Omaha itself actually was pretty nice, especially the old market area. Has a really good bar and restaurant scene. So Saturday night we were bar hopping, went to a really cool speakeasy um, bar that night. But and then the next day or Saturday was the meeting. So I won't talk too much about the meeting because anyone can watch it online. But one thing that you don't see online, you can only see in person, is there's this movie they show before the meeting. It's like 30 minutes long, and it's basically just a bunch of skits with like Buffett and Munger and various celebrities. So that was really funny. Um, and yeah, just quickly about the meeting itself, was Charlie was amazing. He was hilarious as usual. Even though he's 98, he's still very sharp. And then the questions I thought were, uh, once you study Buffett and Munger long enough, you can kind of predict what they're going to say. So there wasn't too much notable from that meeting that like I learned that was new, but yeah. And I'll just close off with when I when we got inside and then the 10Q dropped, everyone's like on their phones reading it. What stood out to me was that they bought 51 billion worth of equities in Q1, which is um, that was just shocking. That's a huge sum, more than they've spent in the last few years combined. And about half of that was Chevron. I'll just go. So the big purchases that we didn't know already were Chevron, Activision, and Apple, which I guess they already owned all three, but they added to them. And then he announced during the meeting they bought some German equities too. But I think we could just go like one by one and talk about those if we have any thoughts.
Yeah,
So
because
yes, go
when
ahead.
you text me about obviously the oil being a majority
Mhm.
of that they were adding a lot of equity to, I was very intrigued. Obviously, part of that comes down to knowing the market and seeing how it's obviously gas is going to be doing extremely well, as it obviously we have the war, and then also just going into the summer, prices and in general usually go up. So definitely a smart play. The one thing I discussed with you is like I still can't get into it's hard for me to justify investing in the oil industry just because of the way I see things going in the future. Not saying that those companies can't be more, obviously they are energy companies, but more, transitioning the type of energy they use. But that's also not the reason why Berkshire is investing them right now. So unless, like I said, they just see that transition going more smoothly, that was the one issue I had with it. I like it right now because obviously it's going to make Berkshire a lot of money, and obviously they jumped on it before.
Hopefully.
Yeah, hopefully. But obviously they got in probably before everything started jumping. So obviously it seems like a good play. But yeah, like I told you, I said my concerns, but I am no Warren Buffett by any stretch of the means. So
Yeah, the oil bet, it is a little weird because I agree with you. If we make this transition to electric vehicles, that will dramatically reduce the amount of oil society will consume. And I think I looked it up on Friday. It was like I could be totally off, but like 30 to 40% of oil consumption is passenger vehicles. So if you go to 100% EVs, obviously demand goes way down. And I guess the bet Buffett is making is that that won't happen for a while. And then there's also the supply side. I guess he's betting that demand's going to outstrip supply for a while, just as demand comes back from COVID. And then over the past few years, oil companies weren't investing as much in CapEx. So I guess that's the bet. And I've done some math on Chevron and Oxy. If oil prices stay around 100, then these stocks are trading at like well below 10 times earnings. So, but again, that's dependent on oil staying around 100. When futures markets imply they're going to come back down to, I think, the 60s within 5 years, although you never know if the futures market is correct. Some people say oil is going to 200, and if that's the case, yeah, Berkshire is going to make a killing on these. But what's notable to me is the Chevron position is larger today than Coke and Amex, which they've
wow.
owned forever. So the only positions larger are B of A and Apple. And I guess that's a good transition into Apple, unless you have any other thoughts on oil.
No, not really. Like I said, just obviously I completely understand it.
Mhm.
The only industry I see where that they won't transition off oil for a long time is airplanes
Yeah,
and
agreed.
travel. That's
Mhm.
it's too hard to move off of currently. But obviously passenger vehicles, I mean, it's already happening. So if that
Yeah,
is, remains the case, that's just my only worry, or biggest
right.
worry, I should say.
Agreed. So then, yeah, Apple, this was shocking. They they said they bought a little bit more Apple in Q1, like 600 million worth. And then he said, I think it was around 150, and he's like, we would have bought a ton more, but the price went back up. Um, so that's interesting to me because I think they trimmed about 10% of the position around 120 a share, and now they're buying more at 150 a share, which is also like 4 or 5 times their initial cost basis. So it just shows like they don't they just forget the past and only focus on the future. They're like, we probably made a mistake trimming at 120. We're gonna buy more at 150.
It's interesting too also to see the transition in Berkshire, because obviously Warren Buffett obviously had the connection for Apple, why the initial investment went through, but he was very anti-tech in the past, mainly because of um, the cost for the valuation. So it's interesting seeing, obviously, like I said, as a lot of people view a lot of the tech, obviously everything's come down drastically recently, and slowed down, I should say, also. But it's nice to see, but also kind of funny to see that obviously they're making another big play in tech at prices that are definitely higher than what it seems like they would be buying it at.
Oh yeah, I mean, what surprised me is I've never really seen them pay over like 10 times earnings for something. Even Apple, they were able to scoop up
Yeah.
10 times earnings. And now they're paying like 20 times, maybe a little over 20 times earnings for Apple.
What
It's
do they
just
know?
interesting. Yeah, it's just that they must think Apple, I mean, the company's already earning like 120 billion a year. I like, how much more can that grow?
Cars.
It's just, I guess it could.
Yeah, I honestly, I mean, like I said, I have no clue. I could tell that was always my worry initially with Apple. Like I said, is if you take away the iPhone, it's like how much their sales plummet. But
Oh, I saw a chart on Twitter today. I need to send it to you. I don't know if it's accurate, but it showed like AirPod revenue versus other major tech
oh,
companies.
AirPods ain't
Yeah,
crazy. It's
it was
insane.
insane. It
It's
was
right.
bigger than
No,
all
that's
these companies. And it's just AirPods.
it's accurate because it's basically it's the best product. Oh, I forgot the name of it. Nintendo's really good at this too, but it's the best like complement product. I think there's a better name for it, but like when you buy one thing, you're gonna buy this like bundle essentially. It's like whenever a consumer buys this, they're gonna buy this as well. Nintendo's notorious with this with their games, and one reason they don't lower prices on their first party games until like 5 years down the line is one, it maintains like resale value, which is kind of going away as things go all digital. But like Nintendo or video games in general, they usually come out at $59.99. Now with inflation, and there was talks of this 2 years ago before even the recent stuff's going to go to $69.99. But let's just stay with $59.99 for right now. A game comes out at $59.99, and in a month or two, it's down to $40. If it's not a great game, it's down to 30. And Nintendo games will hold their price for 4 years until Nintendo themselves re-releases it as like a classic. They'll take like their top 20 games and release them for $20. I love their pricing scheme. But anyways, where I was going with that is that like the Switch, the Wii U, the Wii, if you own a Nintendo console, you're buying Mario Kart, you're buying Smash Brothers, you're buying the Zelda game. Like 50%, 80%, 60% of them, like everyone buys those specific games because mainly you're buying Nintendo products for their games.
Yeah.
And iPhone, it's turned into the same thing. It's not that you need AirPods, but if you have an iPhone, the most convenient like earbuds are the AirPods. And now they have 3 versions too, which is great. I mean, I still have my originals. I haven't felt the need to upgrade to the AirPods. I don't even know what the middle one is now. It's like there's the AirPods Pro and there's like a middle one which has a newer design, but I don't even know the difference. I mean, obviously better sound quality and battery life probably, but I don't know why there was a need for the middle. But yeah, it's one of those things of the attachment to the iPhone. It's like everyone owns them. It's absolutely nuts. And I have to say it is one of their best products. How seamlessly
I still have the wired ones, but
dude, it works so seamlessly. And like the other thing
Yeah.
I love, because I was a big Beats guy, and the Power Beats, which are the ones that wrap around the ear, which my buddy actually just ended up getting with his new MacBook he just bought. But they're so convenient because since Apple bought Beats, it works the same as AirPods. You literally just open the case, automatically pairs, shows you the percentage, it's amazing. It's just so easy. And then also if you own like an iMac or a MacBook, an iPhone, an iPad, it's just everything's seamless, like just one to the other. Like I'll be on the airplane listening to my phone and I'll switch to my iPad when I want to start watching something else on my Beat Studios. It's like they made it so easy, and it's just because it's what they own and they're able to then integrate that, which is one of the best. Like that's what Apple's known for, of why their ecosystem is so desired.
Well, another example of that is actually in my Airbnb in Omaha. There's this huge TV, and we couldn't figure out how to get the games on. And then my friend's like, "Oh, it's Apple TV. You could just stream it on your phone and put it up there in 2 seconds." And I was like, "Wow."
Yeah. Oh yeah. An Apple TV with AirPlay.
Yeah, AirPlay. That's what. Yeah, it was like.
Yeah,
wow.
that was one of the things that always drove me crazy with not having a MacBook computer or anything like that, is not being able to put my laptop up. I have, obviously I can put my phone up, which is great, but yeah, it's amazing. They made it so easy to use everything. And then it just gets people to buy every product. Like, I mean, I'm not an Apple fanboy by any stretch of the means, yet I find myself wanting every Apple product. Like I have an iPad to watch like on the go or TV or whatever it is.
Yeah. You're a closet fanboy.
have an iPhone, bought an iMac for editing and just some other creative projects.
Mhm.
Have an old MacBook, which I'm selling actually, but it's just having, and I mean, old Apple Watch, the Series 1, they're on like Series 7 now, but it's just like I have at least one kind of every product they have. The only thing I don't have is the HomePod. The HomePod is one thing I don't have.
What is the HomePod? Is that like an
It's
Alexa?
it's their like smart speaker.
Okay, yeah.
They have like a mini for 100 and they have like their big one for like it's either like 2 to 400. I don't know. It was pretty expensive. But yeah, they have like a mini for like I think it's 100, maybe it's 70 on sale. I don't know. But yeah, that's like the only thing I don't have. My favorite thing, my personal favorite product is the Apple TV because I have all my photos on there. I have all my apps. It's just an Apple TV Plus is on there. The worst naming scheme ever, by the way, that they have Apple TV, but you need an Apple TV to watch Apple TV. They should have named it something else. Trying to explain that to my parents was a nightmare because they don't use any of the Apple products. My mom has an iPhone and that is it. Like there's no other Apple products in our household. But yeah, it's amazing company, and I mean they just they have their consumers in their ecosystem, and it's really hard to leave because just how convenient it is.
Yeah. Do you have any other thoughts on Apple, or should we move on to Activision?
Not really. Like I said, the only other interesting thing to look for is one, do they enter the car market? Okay. If they do, I don't know if they're actually going to make their own car, if they'll just partner with somebody like a current manufacturer. But then the biggest thing for me is does that hurt them? Because obviously one of the best features in all cars today is CarPlay. At least that's what I use all the time. And they have Android Play or whatever it's called also, or maybe it's Samsung specifically. But being able to integrate, your iPhone onto the main screen is such a plus. So would Apple want to remove that from all their other cars to, increase, you know what I mean? To like, oh, we're exclusive.
Yeah, I could see that because didn't they refuse to put Messenger on Androids for like that purpose? They wanted to keep
pretty
it
much
just
that you need an iPhone. But the thing is with the car market is, do you want to increase? Because if you take it out, say you take it out of cars, not that this would really drastically change, but it would be more of like a thing that Apple would be losing. I don't know if it would necessarily make them lose customers, but like with an iPhone, I know it's going to work with whatever car I buy. Like I'm not saying Bluetooth. Bluetooth is a completely different thing. I'm talking about like literally the interface that you can get up on your screen of your car, but just by plugging it into the Lightning port, and some now are even it's wireless. When you lay it on like the Plaid for wireless charging, it also then can do CarPlay. But are you willing to sacrifice people who have iPhones to not have that convenience of your iOS system on their car for you to sell just your brand specific car? Because not everyone's going to buy the same car.
Right.
Does that make sense? Like not everyone's going to be able to either afford an Apple car or want to buy an Apple car. So are you going to strip away all the benefits of having an iPhone and every other automobile just to prop up your personal one, your brand's own car? Or do you want to maintain your stronghold over the ecosystem over Android, maybe, with that's the one worry or the one complication I have. And maybe it's just they continue it all and there's just more features in an Apple car. It's possible. But that's the one thing. And then also if the smartphone ever is reinvented in the next decade, because we've kind of been at a standstill with innovation with phones for a while. So I feel like at some point there's going to be something new and it's going to just be groundbreaking technology. Like we might not be there in the next 5 years, but in the next 10, we probably are. So it'll be interesting to see that. And then again, does Apple dominate that market?
Probably.
Probably. That's why so it'll be interesting to see, because I think that's one issue. Obviously iPhones are still selling, but it just, people are, feeling less obligated to upgrade every year now versus how I feel like it was in the 4 to 7 range, really 6, like the 4 to 6, iPhone 4 to iPhone 6. I felt like every leap was pretty big. And now it's just kind of like,
Yeah. So should we move on to Activision now?
Yeah. I mean, obviously we've talked about this before on the podcast. I thought, I mean, it's a huge move. If it ever finalizes, I'd love to readdress it and just what it means for the video game industry, and also for Activision themselves, and then obviously for Microsoft and Xbox. But I personally think the deal is still going to go through. We had a friend personally say that he doesn't because the stock price isn't reflecting it, but Twitter's kind of the same situation right now.
Well, that's
Um,
why Buffett bought it, is he thinks it's going through.
yeah, exactly.
Or I'll correct that, but yeah, go ahead.
Yeah, but just like I said, just the same idea. But I personally think it'll go through. I don't think it's too crazy of a move. I think Sony has been purchasing certain studios as well. Activision's a very large one and a very predominant one, especially in first person shooters with Call of Duty.
Mhm.
But yeah, I think it's a personally great smart move. I mean, even when we were first talking about it, you're like, oh my God, I might buy some just because of the
Yeah.
upside in this market to get a return of,
Mhm.
actually a positive return guaranteed, obviously not guaranteed, but speculating guaranteed.
Yeah.
It's like that's a great buy right now. And I'm personally kind of in that boat as well. Just there's so many things that are so dirt cheap. It's like I kind of want to be buying these up for the 3 to 5 year period. But yeah, I personally think it's going through. I don't think it's too big of a issue going through, the government side of things. But yeah, I personally, I was surprised to see that they were buying it. I was very happy to see it, and I'm glad they did because, like I said, I think it'll go through, and obviously they're going to profit from it.
I was really happy when he said that, because I actually did see this coming, like right pretty shortly after the Microsoft deal. I said I could see them buying a ton more in a sort of merger arbitrage deal, like they did with the Red Hat a couple years ago. And Buffett's been doing these. He actually, when he first started out, he made a ton of money doing these sort of things. So, so that was one of my few calls I've gotten right. And then I bought some as well. It's just, yeah, the risk reward look is appealing. If all you need is for it to go through, and usually you have to factor in like, oh, can the buyer afford it? Well, in this case, it's Microsoft. They have more cash on their balance sheet than the whole acquisition. So yes, it's really just regulatory issues now. Um, and then you have to consider timing as well. But if it goes through, you get 20% return or more in 1 year, regardless of what the rest of the market does, even if it collapses. And the downside is you still own a great company that's growing and should continue to grow, and
Now,
it's not trading at a crazy multiple.
that's what I
So
was just
yeah,
going to say. Not only that, you're going to be, like I said, if it doesn't go through, you're going to be holding on to a great company that currently has had its stock beaten down because of bad publicity within the company.
yeah,
So it's not like this company is on all-time highs, is killing
no,
it, is great in the public eye right now. Like this company has been getting beaten down because
yeah,
of the issues within the company, which is
yeah,
also, I think, a big reason why Microsoft wanted to go in and one, fix it and saw the opportunity. But then two, obviously in return, they're getting a great business with great IP that they'll be able to use and hopefully, incentivize people to buy an Xbox over a PlayStation.
yeah, yeah. I have no other thoughts on Activision. I just was happy to hear that Buffett was buying, and that one was actually Buffett, like he said.
Yeah, no, that seems right up Buffett's alley to
Stuff.
do a move like that.
Yeah.
Any more thoughts on anything from the Berkshire Meeting or any moves?
Just one other note is at the beginning or near the beginning, Buffett mentioned they bought some German equities too, and they added to their Japanese holdings. But I don't really have any thoughts on that because I don't know what the companies are, or what industry or anything.
Yeah, it'll be interesting to see maybe what those are in the future. And
Yeah, I don't know if we'll ever know because those don't pop up, but we'll see.
Well, we can transition into just kind of what's been going on in the markets. Obviously, talks of a recession have been going on for months now. I believe we just saw kind of towards the end of last month, the Dow plunged over, I think, 900 points, which was the worst day since 2020. And another thing, obviously, that kind of spooked the market is the Fed obviously raised interest rates by 0.5%, which is the highest rate increase since the year 2000, which is kind of crazy to think about.
I didn't know that. Wow.
Yeah, and then on top of that too, I mean, I think the Dow's been down 4 or 5 weeks in a row.
Okay.
At the close, obviously, which we haven't seen also in a long time. So obviously a lot of really kind of bad indicators for the market right now. I think everyone's getting very bearish. And on top of that too, you might be having a lot of margin calls, which is obviously always makes things worse and kind of speeds up the process of the market going to a downturn. I mean, obviously it's a great opportunity if you're, in a good position and have, some cash on the sidelines. Obviously, it's very unfortunate for, a lot of people, that's, their life savings or, investment, or whatever. And if they really need that badly, then obviously a lot of people are getting hurt. The only interesting thing I see is that we're going into this downturn, yet the job market hasn't flipped yet. Obviously, people are still trying to hire.
Yep.
When normally when you're going into situations like this, people are actually firing and trying to lay people off to obviously save money.
Right.
So that's one interesting thing that I see different than this, because obviously we were extremely young in 08 through like 010 or 2010. So it's going to be interesting to see how that plays out. I saw some people speculating that the next quarter at earnings, you're going to see possibly some more bad earnings, and then you might see some people getting laid off after 2 consecutive bad quarters, possibly 3, depending on which company. So and that's going to be something that's I'm intrigued to look at, because just the job market's been confusing me, as well as consumer stayed pretty strong for a while when normally you would see that slowing down. However, in some companies you're seeing, I think, Zillow and Toll Brothers, you're seeing downturns of the housing market slowing down. Mainly, I think that's though because of interest rates. You're seeing the market downturn because of interest rates, and on top of that, also I saw a lot of retail stores, their stocks were getting a little bit hit because they saw traffic decrease. So maybe we are finally starting to see that and go kind of towards the worst of this, which is why it's being reflected in the market. I don't know. Do you have any thoughts on that?
I don't follow macroeconomics too closely. I don't know. I just think I kind of like the idea of just ignoring the macro picture, do bottom up research, focus on the companies you own and what's going on with them, and having a long-term mindset. And whether or not there's a recession this year, I have no opinion on. So what I will say though is, like, with the market coming down, it was so obviously a bubble early last year. Like when you talk about when people are talking about price to sales ratios, first, that metric should never be used ever, because it doesn't tell you anything. Price to sales, when people are talking about adjusted EBITDA, when you have the whole GameStop AMC thing, I mean, it was just so obvious.
Yeah.
And I should have been, even though I wasn't in any of that stuff, I should have been more cautious and maybe started to build up some cash. It just should have been obvious back then that there's going to be some sort of correction coming.
The only thing I'll say though, the only problem is, I mean, what we saw basically a bull market for 10 plus years. Like,
yeah,
people kept saying, I mean, obviously it got out of control kind of last year. And I think during the shutdowns, we saw some very interesting things with obviously the market getting stimulated, which I think kind of maybe finally brought us to a breaking point with just throwing so much more cash in and also giving consumers that cash. Which was propping up a lot of numbers in the short term, but obviously that was going to have to eventually, come back down. So I think that's maybe finally what was the breaking point. Honestly, I don't think we didn't have that, I don't think we would be where we are right now, because obviously you wouldn't have rates being increased. You wouldn't have had that super high inflation. Honestly, I would have been interested to see how long we could have gone on that trajectory. Obviously, you never know what's going to happen. And obviously something did happen. And 2 years later, now we're finally seeing kind of the repercussions of it. Plus, a bull market's eventually going to have to go bearish. It's going to have to be corrected in some sense. It's just kind of the natural flow of the market. But I would have been very intrigued to see how much longer we would have gone had 2020 not happened.
Yeah, I agree. Because the inflation now is basically caused by the fact that demand returned faster than supply. And if COVID never happened, then they would have stayed pretty much in balance.
And we wouldn't.
So I agree with it. Yeah, I wonder how much.
So much the money supply either.
Yeah, so that's an interesting thought. Like maybe we would still just be grinding higher if COVID wasn't a thing.
But like I said, to your point though, the time period you're mentioning is after our shutdowns. But I just was saying that in terms of seeing kind of, like I said, how things were going. Knowing to save up cash because it has to, but like you could have been doing that for 10 years because you just kept seeing things go up.
Yeah.
But it's just something interesting to think about that I've kind of just wondered. Because obviously things in the economy were going extremely well. And then we kind of obviously hit a breaking point and we did what we had to. Obviously, there was no perfect correct answer. For the most part, we kept obviously the economy pretty stable. We're just going to have to face the repercussions of, some of it now. Probably would be a lot less worse what we're dealing with now than what we would have dealt with. There would have been a lot more pain. So
yeah,
obviously
Buffett
the right
totally
choice.
agrees with you
Yeah.
on that. Yeah.
Yeah. And that's one thing is I know the Fed has been getting a lot of flack, but I think Jerome Powell did do a very good job. And I was going to say, didn't Warren Buffett actually praise?
Yeah, he's been praising him a lot.
Which
He's
is not popular to do. A lot of, I mean, even smart people too, like not necessarily just your, average consumer person on the internet who's ripping Jerome Powell because of course.
Yeah.
But I mean, there's been a lot of criticism from,
yeah, people who know nothing about economics are criticizing the chairman of the Fed.
Exactly.
That's funny to me.
But yeah, so it was just something interesting to think about. And yeah, obviously it's led us to where we are. And obviously if you have the means to, hopefully, everyone's all right. But obviously it's a great buying opportunity because in 5 years you could make a crazy return if you're in the right stocks.
Yeah, I also think a lot of things that are down 80% are going to go to zero. So like, you gotta know.
I'm in a different boat, and maybe it's just not the companies I'm looking at. Maybe you're, more on a broad scale of like, I'm like, oh no, I think these will be fine. Like at least everything I'm in, because I'm in a lot of growth plays. Only one am I, okay, two I'm worried about, but I'm not, one's a very small position and I'm actually pretty confident that'll be fine. It's a penny stock. But my other one, which has turned into a penny stock, it wasn't. It got out of that at one point. That one I am a little bit worried about. Luckily, it wasn't too large of a play, but it is something that I was not seeing going this way, and it started hurting prior to a lot of this hurt in the market. So that also kind of worried me. But you never know. So we'll see. I
mean, I own Vroom, which I think has a very high chance of going to zero. But I own it because I think the risk reward makes sense. Like I think the probability weighted outcomes, if they do reach scale and profitability, it'll be it could 50x potentially. But I'm saying 80% chance it goes to zero.
Yeah.
I only have, and it's a small position.
See, my other positions that are more penny stock wise, I'm totally in your boat with that. Although I'd say it's more 60% they'll continue to go up and like 40% they'll go to zero. This one though, I'm like 90% sure it's probably going to go to zero at this point. And I am like, I just wish I didn't invest in it at this point.
As long as it's not a big position, it's whatever.
It's larger than what I would have wanted knowing this. Like when I build out, there's only one penny stock where I'm like very heavily into, or it's, and like I said, I call it a penny stock. It wasn't a penny stock. And just now with the market, it is. This is another one, same way. It was at $9 at one point, but that one I'm totally fine with having. I think it's like 8% of my portfolio. That one I'm totally fine with because I'm a big believer in it. That one, but I brought it up before. But this one specifically, though, I just wish I never invested in. If I did, I wish I made it a more traditional penny stock purchase. That's all I've got, though. Anything else you want to close on?
Nothing to add.
All right, sweet. Thank you guys for joining us. This was episode 5. We'll see you next week.